Hello everyone, this is Ryan Mallory for SharePlanner.com. Today is December 13th, 2011. Told you guys last week I'd try to make the video commentaries a little bit more of a regular thing, and here I am doing it yet again. So let's just get down into it and talk about what we saw in the market today. I think Adam Beatty, he's going to try. I can't speak for him for sure, but I think he may try to have a video watch list up tonight. We'll see about that. But nonetheless, yeah, the FOMC statement came out at 2:15. Prior to that, though, the S&P looked like almost like somebody knew what was going to be said, because when you look at the action that we were getting, we were seeing a huge spike up early on. We sold off. That was pretty significant. But then, as the afternoon wore on, prior to the statement, you got this coiled spring here that began developing. And right before it, literally minutes before it, and I don't know if this was just a sucker's trade or what, but the FOMC statement came out right here on this down red candle. But 10 minutes prior to it, we started breaking out, moving higher. I'm like, geez, what the heck is going on? Because we were in this nice coiled trading pattern for hours, and we finally broke out. And then when the FOMC statement came out, it was just no looking back. The market just sold off perpetually throughout the whole day, and finished about 11 points lower on overall. So for tomorrow, I'm looking at, honestly, for us to continue more of what we got today. But I tell you what, I wouldn't be surprised with whatever happens tomorrow in the market. But this is some good continuation that we got. There's a very bearish candle for us to pop up and almost erase the day's entire gains and then sell off perpetually thereafter. The only thing I don't like is that we dropped below the 50 and the 20-day moving average, but we didn't close below it. I hate that, and we had a little bit of a rally at the very end of the day, taking us about 5 points off the lows. It seems to be a norm now that anytime we have a sell-off, we'll at least have some kind of rally to try to just irritate the bears to a certain degree. Somebody asked me in the chat room earlier today, am I bullish or bearish? I told people that I'm bearish, just not because of any moral obligation or anything, but simply because I'm just following this trend line downward, and it's got quite a range to it, but we've tested it 3 times now. Actually 4 times. So this is the first time when we established it, followed by a second time, huge sell-off in July and August. Then we come back up, huge rally, monumental rally, where we tested it again, sold off, come back up, and like 3 or 4 times now in the past couple of weeks we've tested that trend line and can't break through it. So for me, the risk is much better defined by shorting this market at this point. Now, anything can happen, but what do I want to be long, where you can still have a bullish market if it drops all the way below 11.57, and we're at 75 points higher than that? Or do you want to risk to where, okay, if I'm wrong about being bearish, I got a lot less room for error, or I got more room for error, I guess you could say, because if it goes up 1263, I'm probably going to be shifting my outlook on the market quite a bit. So the risk reward is definitely favorable. We're in a protracted downward channel here. You have just bearishness in the economy. You have bearishness, in some of the retail sales numbers that we got today. So overall, there's not a lot going in the favor of this market, and as a result, it doesn't inspire me really to say, hey, I'm going to start holding some long positions overnight. And if you've known me for any time now, this past year in general, more so over the last 6 months, I've been very hesitant to hold positions overnight, just because of how schizo this market has been. And it's still schizo. Maybe I'm making a mistake holding my position. I got like 3 positions, pretty heavy in the S&P. I added to that at the close today. I'm still long oil. I added a little bit to that on the spike up to like $101. I added some to that SEO position, which is a double ultra on the price of crude oil. And I added Weight Watchers, WTM, which I'll pull up here. And you can see that That is not it. Man, I am having a total mental block here. Here you go, WTW. I don't know why I was saying WTM, but because that chart really did not look like what I was shorting, and the volume wasn't there either. So you have this nice little upward trend that it's breaking through today, and this is great. I mean, look at the volume on it today. So you got a lot of strong volume. There was a reiteration that somebody was holding their outperform an $82 price mark, and yet it still fell lower today on extreme volume. So the volume's there. It's breaking below a key support level. It didn't really bounce much going into the close. So I like this position. You know, I can get 3 or 4% out of it. I'll be done and over with it. So ideally, I'd like to get out of all my short positions tomorrow. So that includes SCO, which so desperately is trying to form a bottom here, and all signs are pointing to that. So if we can get some follow through tomorrow, I'll probably be out of that position as well. That trade hasn't gone as well according to my plans as I would have liked for it to. And then SPXU, which is a 3X on the S&P. This one finished much higher today, did much better overall. I'd like to see it get into this gap here and try to fill it at around maybe 1548 and then get rid of it. But if it gets somewhere close to it, I'll still dump it. So on the S&P, that would be filling this gap on at around 121. So it would require about a 2% sell-off, which is about 20 points. In this kind of market, it's very feasible. I don't doubt that it could happen tomorrow or over the course of the next couple of days. But once it does, I'll be out of that position. But as it stands, we are in the gap on SPY. You can see that there, and so the logical destination is for us to at least go down to 121 or fill it perfectly at 120. This market really picks up selling. It needs to fill that gap as well down at 116. So there's a lot of space that needs to be filled up that was left behind in the uber bullishness in preceding weeks. So we'll see how that plays out. Amazon, some talks about Amazon. Worth noting, we've been talking about this one for a while, the bull flag that you had in this stock and how it broke down. This is your bull flag right around in here. I'm sorry, not a bull flag, bear flag. Bear flag is basically an upside down flag post with like a flag waving on it. So, and I'll draw it here for you guys so you can see it real quick. I have to be somewhat fast because when I post these things on YouTube, they have like time restraints. So, but you can see there's a pull, downward pull, and then a flag sort of shooting upwards, and then it just breaks down. So it's a great trade setup. I would say don't try to short it at this point because you do have a trend line support here going back on the weekly chart. It goes all the way back to late 2008. So it's, you know, that's going to be a strong support level. You know, I don't doubt that it will break it possibly if the market sells off another 2, 3, 4%. But I think the opportunity has come and gone to go short Amazon at this point because the risk and reward is not in your favor now. Netflix, tons of takeover rumors on this stock. This is really a buyout play either by like Verizon. Some people have talked about Facebook trying to buy out Netflix. You know, there's a myriad of them. And then, of course, we'll check out Apple as well. This stock, I think, is held up pretty good. It's got a nice bull flag here. I don't like the overall action we're seeing on the daily charts because you have this, what looks like to me is a head and shoulders that it's trying to develop. You see here, that's the left shoulder, head, and possible right shoulder. So if it comes down and touches this trend line, there's a good chance it's going to break that because you just have this really nasty head and shoulders pattern forming. So be careful with that. I would say get very bearish on this sucker if it drops below 363. If you have, you know, options or long positions, I wouldn't hold it beyond that. All right, that's going to do it for now. You got my my leanings on this market. I'm not the least bit bullish. I was looking for a follow through today. I didn't think I was going to get it the way we were acting early on, but good old Benny and his fearless beard came to my rescue and sent these markets lower. So see if he can keep that nasty tone going into the markets tomorrow, at least while I can get out of these short positions with a decent gain. All right, y'all take care. If you have any questions, hit me up in the chat room. I'm always there. Our Traders Forum, Adams Options Income newsletter. the SharePlanner investment system, all great ways to learn about this market. Check out our knowledge base, and all this stuff is in the toolbar of our website. So don't be a stranger. You can always hit me at ryan@shareplanner.com if you have any questions via email. But appreciate you watching this video, and God bless you all.